Caitlin Long, a pioneering force in the crypto industry at the head of Avanti Bank, tweeting a regulatory crackdown in the United States has begun. I believe we have that tweet as well. It won't impact Bitcoin or Ethereum directly, she says, but it'll impact intermediaries and US dollar access points. And joining us now to discuss is Caitlin Long herself, founder and CEO of Avanti Bank in Wyoming. Welcome to the show, Caitlin. So you have a really interesting tweet thread that you tweeted out earlier this week. You say a regulatory crackdown is happening and most people in the crypto industry don't even realize it. So explain to us in really simple terms what exactly is going on.
Oh, well, a lot of folks do realize it. If you're watching what's going on crypto Twitter, there are a number of folks who have, around the world, not just in the United States, talked about changes in the ability to move money in and out of exchanges, especially fiat currencies. So we've seen this drill before in our industry so many times, and it seems like it's happening again. It does tend to happen, towards the end of bull market cycles. So in some ways, we're repeating what happened in 2017.
Well, specifically in your tweet thread, you talk about the Fed is proposing a payment system access guidelines, and this is. Perhaps you can go into explaining why this is important and why crypto Twitter should be having an eye on this.
Well, this is a piece of the puzzle. The Fed proposed this back in May, and a lot of it has to do. They didn't mention crypto at all in the proposed guidelines, but a lot of it has to do with the fact that you have a couple of new types of charters that are specializing in providing services to digital assets. That are asking for direct access to the Fed. The first group of bank charters is the Wyoming Special Purpose Depository Institution, or so-called speedy banks. That's Kraken, Avanti, my company, as well as WDT Financial, all of whom are chartered, more to come. And then you have that flurry of OCC trust banks that were granted conditional charters early this year that are under review. They're not technically eligible to apply for direct payment system access, but it pushed the Fed. And so even though the Fed did not mention cryptocurrency in the original publication, that is in large part what it was aimed at. And now the question is, since the public comment period, which was a relatively short public comment period, only 60 days, since that comment period is over, what now is the Fed going to do? The Wyoming Speedy Banks are eligible for access to the Fed payment system, and we are knocking on that door. And we've been waiting. They've slowed us down, no question, but I think this is going to be a big deal for our industry when it happens, which we're pretty confident it will.
Mm-hmm. And you mentioned that access to U.S. dollars and bank accounts is integral to the crypto industry. And I wonder, does this signal that the financial system will never really be independent of fiat government banked money?
Well, the on-off ramps matter, and even to the hodlers and maximalists among us, everybody got in through some sort of a fiat access point, and they do matter. And in fact, actually, as you were just talking before this segment about El Salvador, El Salvador's banks are U.S. dollar banks because right now the legal tender in El Salvador is the U.S. dollar. And that is an access point for U.S. dollars that happens to come offshore. Will there be any sort of reduction in that access point? It remains to be seen. There's some chatter in Washington about controlling those access points. But again, this is not new. We go through these cycles, and the only folks who will see this as new are those that weren't here in 2013 and in 2017 when we saw this movie play out again. It does seem that there is a reduction in fiat currency access points that tends to happen towards the end of bull markets, and that tweet storm that you put up talks a lot about the history of that in 2017. There were a lot of companies in our industry that had to close their doors, legitimate companies that the startups failed because they lost their banking access.
Good morning, Caitlin. So nice to see you on the show. So I wanted to talk to you talking to you a couple of years ago about like sort of this in a whole more of a global context. So even though Wyoming has been like a total front runner in the crypto space, you've been critical in the past of the U.S., right? And just like the U.S. regulatory environment. And, as you said, this is kind of a cyclical thing. But like, I think we had this conversation maybe 2 years ago. Like, are things getting better? Are they getting worse? Because right now we're seeing countries all over the world. I mean, El Salvador is a very extreme example, but countries all over the world really like upping their game on crypto. Like, where is the U.S. fit in globally? Like, are we catching up? Are we still where we were 2 years ago? What needs to be done? I'm just curious of like your macro view of this problem.
Yeah, great question. I remember that conversation 2 years ago for sure. There's a range. And by the way, it does not cut across political parties. Just like in the Trump administration, there were pro-crypto and vehemently anti-crypto people. The same thing's true in the Biden administration and within the Federal Reserve itself. The Federal Reserve is really the only agency that has not yet taken action on crypto, right? So when they do, I think it's a big deal because that's everybody in the industry, to the extent that the Fed decides that they don't want any companies having access to the banking system, every company in the industry would be impacted. To be clear, though, that is not what I think is happening. Not at all. The themes that we're seeing coming out of Washington, and it's almost a daily drumbeat. I've been chronicling it since April on my Twitter account because I'm watching it so so closely for Avanti. But there's been almost a daily drumbeat of regulatory news. And the theme seems to be, we're not going to try to ban this. We're going to control the US dollar access points. And everybody in this industry has to get regulated, and you've got to play by the rules, and you definitely have to comply with the Bank Secrecy Act, which is all the know your customer and anti-money laundering type of laws. And as long as you do that, then you're going to be okay. But to your point, Emily, what we haven't had in the US is clarity on where the guardrails really are. There hasn't been a way for a crypto native company to get direct banking access with the Fed. None of the companies in this industry can bank directly with the Fed. Every one of us has to go through an intermediary bank. And that means the Fed can't watch this industry grow and can't, you've seen the Fed now starting to talk about some of the systemic implications of stablecoins. Let me give you a stunning fact. At the beginning of this year, PayPal had $33 billion of cash for customers. It's a fintech, not a bank. And the stablecoin industry had $27 billion. The stablecoin industry is now at $101 billion. Okay, so what we've done in this industry in the first 6-ish months of the year is add more than 2 PayPals the size of non-bank, quote unquote, deposits, right? This is a big deal.
Caitlin, along those lines, though, it is of concern to, as you pointed out, the Financial Stability Oversight Council, which Secretary Yellen oversees. They are, from reports that at least, that there is a potential of regulation of stablecoins. Because there are some questions, obviously, about how people get into them, what they do, where the assets go, et cetera. So what do you see ultimately coming out of that, potentially, out of the FSOC? What do you see them doing to regulate stablecoins? What's their worst case scenario and what's the most likely scenario?
Well, last week, to your point, there was a leak that FSOC, which is the oversight council of all the different financial regulators in the United States, it does want to regulate stablecoins, and it's because of what we just talked about, right? This starts to have systemic implications given how big it's become. There were big fights over whether non-bank fintechs should be allowed to become as big as PayPal is, and now we've got 3 times the size of PayPal in this industry that popped up in their eyes almost overnight. And so what's likely to happen? The leak is, I know as much as you know, we're all reading the same stories in the newspaper. The leak said that FSOC wants the Fed to regulate stablecoins, which makes sense because the Fed has the prudential regulatory responsibility over the whole financial system, and they also regulate those U.S. dollar access points. Every single dollar that goes through that anyone transacts with, whether onshore or offshore, ultimately clears through the Federal Reserve.
So, what do you see as the worst case scenario? What do you see them doing?
Oh, well, essentially telling, if we go back to the way money market funds came about, that was Merrill Lynch in 1977 taking on the banks. Right. And what evolved is that money market funds got registered with the SEC. So places where you can store cash, generally bank deposits and money market funds. And the question then becomes, will stablecoins be a third leg of the money market? And if so, I think you can expect that it's going to be regulated. And so there are a couple of different ways it could go. It could be telling stablecoin issuers, you must register with the SEC, just like money market funds, or it could be go get a bank charter, or it could be some combination thereof. But what's fascinating is potentially it does require Congress to act, depending upon what they do. And as you know, Congress is pretty much paralyzed. So, yeah.
Right, but they are trying to push through the taxonomy legislation, albeit slowly. But there are efforts in the House now.
There are efforts, absolutely, but nothing's moved. And what's fascinating is the Wyoming SPDI banks just coincidentally are sitting on their doorstep and don't need any congressional action and wrapped up in a bow and ready to go. So will the Fed use that as one of its tools? We don't know. This is all out in public now. We haven't been talking about it at Avanti, but we're at the altar with the Fed, just like Kraken is, and just like WDT Financial is. And is this bank charter one of the solutions that they will end up using and telling folks to go get a bank charter? And if that is the case, we know there are lots of companies in this industry circling. And if the Fed actually does grant access, then I think a lot of companies will end up coming into Wyoming and registering. But they may not go in that direction. They may go in the direction of treating them like money market funds and requiring them to get registered with the SEC. And again, this is the ones that actually touch US dollars. I'm not talking about the algorithmic stable coins, because those don't actually touch US dollars. There's not that much that the algorithmic that regulators can do with DeFi, with the algorithmic stable coins, other than just, again, control those US dollar access points.
Senator Elizabeth Warren has written in to SEC Chair Gary Gensler about what exactly is the role of the SEC. And it almost seems as if she wants some clarity on that, and in effect, clarity on what Congress can do to step in that regard. We had Senator Pat Toomey on yesterday. He shared his thoughts on the SEC and crypto regulation. Have a listen.
It's not at all clear to me that the SEC has a role in regulating cryptocurrencies. Cryptocurrencies are not securities, and the SEC regulates securities. So that's not at all clear to me that follows. And I'll be watching very, very closely to see what the SEC does.
So, Caitlin, cryptocurrencies are not securities. Do you agree with that statement? And furthermore, I would love to get your reaction to Senator Warren's letter.
Sure, some are securities, most are not. I would agree with that. Some are, but it's so funny to see Congress asking the SEC what it thinks its authority is, because Congress writes the laws, and this underscores that both Senator Toomey and Senator Warren are on the Senate Banking Committee. If the Senate were able to move, they would just do it, but it's all paralyzed right now, and so I think expecting action to come out of Congress that actually results in a law that gets signed by the president, there's a very low probability of that. And so the question then becomes, how did the regulators operating within existing laws use the powers that they already have been granted by Congress? And that's where, watch the leaks from FSOC, because FSOC definitely does have the authority to get the different regulatory bodies, including state regulators, to work together to protect the integrity of the financial system. And again, it makes sense that the Fed becomes the regulator of stablecoins here.
Caitlin, real quick, I just don't know your view on this. What do you think about this idea of the Fed issuing a central bank digital currency or digital dollar? Because we're seeing these actions pick up all over the world. Do you think this is a good idea?
Well, it's plausible, right? I think all of us understand, including a lot of folks inside the Fed, that the U.S. payment systems have atrophied, right? Think about ACH. Think about how easy, or rather how difficult it is to move money. And being one of the banks that's in the weeds on the integration with those payment systems, oh boy, there's a reason why it takes It really does take 18 to 24 months once you start a bank to get the doors open. And a big chunk of that is the integration work that has to be done with the legacy payment systems. They are, in many cases, not even API based. Most of the providers that integrate and provide those integration services with the Fed don't even offer APIs. And so it is tedious work. And that's one of the reasons why our payment systems are not great. And so Brian Bishop, our CTO, who's a Bitcoin core developer, put it very well. Stablecoins offer straight through integration, whereas the best that the legacy payment rails offer is straight through processing. And again, most of the banks don't even offer APIs these days. Most of the time when you're sending an ACH or a FedWire instruction, you're typing it into a form. And businesses are sending flat files back and forth, right? This is old technology, and stablecoins are by far better technology in large part, because they're just easier to integrate with. And I do believe stablecoins will become globally systemic, important technologies, and the banks will integrate with them. These are not going away. And so now we're back to that age-old, decades-long debate. Should everything be inside the banking system with a bank charter, or should fintechs continue to operate outside the banking system and just get their US dollars directly through banks? That has huge prudential regulation and financial systemic stability implications, that very decision.